Good morning, everybody. It is 8:25 a.m. It is March 2nd, 2023. Markets decided to move down on us, huh? It's all about that 10-year yield. We'll get into that. Got some news going on. Let's get right into the watch list here. We got VIX up 2.28%. 10-year yields up 1.3%. Jeez, it's up to 4.04. That's the story right now, okay? So dollars up too, 0.45. Dow, check that out. The Dow is up 0.2. Now probably because of Salesforce. All right. But let's get into this. Let's see. Crude is had some gains, but now it's almost flat. Bitcoin's basically down 0.15. And let's see what else we got here. The ES is down 0.44. Bonds being sold. These are 30-year bonds. Russell's down 0.58. The Nasdaq's down 0.7. Now, what do we have? Any kind of a leader here? Not really. Google. That's not. I wouldn't call that a leader, right? But we have a bunch of laggards here, and let's get into it. We got BABA down 1%. Nvidia down 1.15%. Coins down 4.48%. Probably maybe linked to Silvergate. So if a sympathy play there, Silvergate is down like 45%. Okay, and Tesla's down 7.68% to 187. Okay, they had their like investor meeting, I believe, yesterday, and I guess they didn't roll any new models out or anything like that, so there wasn't anything to ooh and ah over. Um, Solid company still, but like they didn't. I guess people didn't like that meeting. Snow had some sales misses. They're down 8.41%. Okay, those are pretty big drops. All right. Talked about Nvidia yesterday, right? I did take one of those in the money call credit spreads. I got out because I just don't trust this market. Picked up a quick, decent amount of money. Went over that yesterday. So actually, the better trade was probably the short in stock. I was looking to do that too, but I just took the in the market in the money credit spread. Um, what do we got? Salesforce is up 15.63%. They really beat earnings. Then that's it. And then as far as top sectors, we got, Lowe's had missing earnings too. Sympathy plays at Home Depot, which also had bad earnings. Um, and guidance, so Qualcomm's down 0.63, Roblox down 1.28%. Sectors. Let's talk about. Oh, I didn't have these set right. All right, so rounding out the bottom, we got financials, discretionary, which is Tesla, Amazon, Home Depot, and then we have semis is the weakest. Okay, all right. There's some economic news coming out in about 2 minutes, and what we're gonna really just look for is initial jobless claims. They always usually forecast 195, but then usually it goes under. Like every week, it literally goes under, which is not good for the market. Just because if we keep hitting this and less initial jobs claims than thought, that's only going to make the Fed want to tighten more and blah blah blah, right? We know how that works. Got Fed Waller speaking later on, and Kashkari speaking later on as well. All right, so this is about to drop in about 20 seconds. So let's just see. Let's just see. I'm curious if there'll be any movement. All right, well, Yeah, non-farm productivity. Come on, drop. Initial jobless claims. Probably already dropped. There we go. There we go again. Unbelievable. They forecasted 195. Only got 190. All right. That's another miss. All right. I'm gonna bring up some other stuff. All right. So there was some news, which is pretty important. So we already talked about the 10-year yield. It's over 4%. We already know that. Eurozone inflation is high. Stokes for ECB. Um, Obviously, I just talked about Salesforce, right? But here's Silvergate, right? This could be a nice setup for any kind of sympathy plays in crypto. But this is the why coin is down so much. So Silvergate sounds the alarm for crypto clients. Um, a crucial part of the U.S. cryptocurrency infrastructure is a risk of collapse under the weight of a depositor-run regulatory investigations into its business. Silvergate, ticker SI, which provides banking service to big crypto exchanges such as Coinbase and Kraken, and did the same for FTX's U.S. operation, said it might not survive as a going concern as a massive firestorm of assets wipes out its capital and leaves it struggling to repay maturing loans. The bank had advances of 4.3 billion from the Federal Loan Bank as the end of this last year. So Silvergate's stock fell another 30%, but right now it actually is down 46.93%. Okay, those forced sales, which skyrocketed after the collapse of FTX in November, had already driven it to a $1 billion loss in the fourth quarter. So I'm gonna be looking at coin today. All right. Just wanted to point that out. That's pretty important news. Why coin's down. Okay. Um, let's move over to the daily charts. All right. So let's look at a couple levels here that I want to note out. Okay. Maybe even make this look a little more presentable here. We'll blow it up a little bit so it looks a little more. Everybody can see it nice and close. Okay. So here's the SPY. And so I like Anchor VWAPs because it's absolute. It's based on volume weighted average price, but I can anchor it from a certain point, right? So I have three on my chart. So the first one I have is the FOMC, last FOMC low. Okay, and all this says is buyers, the average buyer is underwater now from the low. Okay, that's all that says. It's below now. Okay, now the purple anchor VWAP, this is from all-time highs. So the average seller now, the volume weighted average price is now below that. Okay, we're below that. You can notice that it was support here. Okay, now here's the last leg of the fence here. So let's look at this. Here's an anchor VWAP from our recent low, and this I believe was in October, right? So 1012 or 1013. There's an anchor VWAP from here. Okay, if you notice, this anchor VWAP was support, 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 resistance, resistance, support, support. Now look, we're about to test that again. Now that means the average buyer, okay, if we go through this, will be underwater. Institutions use anchor VWAPs, so that's why I have them on my chart. Okay, so that's the anchor VWAPs. So now I can go to my other non-anchored VWAP chart. Let's see. Sorry for a second. Give me a second. I know I have them here. Oh, here we go. I think I said without. Here we go. Okay. Sorry about that. And of course, Everybody's looking at the same stuff, right? So what do we have? We've got a double bottom here at the 200-day moving average on the SPY. Futures moving averages are a little different, but in the SPY, double bottom on the 200-day moving average, right? Pretty much hit the 50-day moving average here as resistance. So we're just in this mix of in the 100-day moving averages here, right? So I took a fib. So there's so much confluence here, it's nuts. It can drive you crazy. But I took a fib from this low, and this is from 1222 to the high. And just look where we're at. The 50% retracement was 339,654, right? Was right here. Look what these came down to. Bottomed out, hit support, right? However, in Fibonacci's, the 6180 is the next level to look at, right? That's 391.4. Also lines up with the 100-day moving average. Okay, that's the next line of defense. Where are we at right now? We're at 392.43. That's where the market is right now. So this this 391.4, you're going to look to see if it gets support, because the 100-day moving average, and this is 61.8. Just for everyone knows, once you pass 61.8 and close below it, usually that's the last. You usually don't retrace and go back up higher. That's usually 61.8 is the last line of defense, and usually it breaks it, and the next move is down. You're not going to get a move back up. Okay, so that's what I'm looking at. So very interesting, right? Very interesting. So I gave you a bunch of confluence there that everyone can see. So if you're a fib guy, you're at a crucial level. If you're a moving average guy, you're at a crucial level. If you're an anchor VWAP guy, we're at a crucial level. So use that all together, right, to build a thesis. Let's look at the Qs. All right, I can give you the Qs, anchor VWAPs. All right, so the Qs. All right, all-time highs in the Qs, now underwater not underwater, sorry. The sellers are back in profit. And we have the all-time low, not the all-time low, the recent low down here, matching up with this 283 and the 50-day moving average below us. Also the 100-day. Okay, also the same story, double bottomed off the 200-day moving average. Okay, and this 293.47 level I keep talking about, right? I mean, that level is ridiculous. I mean, that's like support, 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 resistance, support, then it bottomed on it, support, and then it was resistance yesterday. 293.47, that is just a beast of a level, right? But now we're double bottomed here, and we're at 288 right now, so we're about down here right now. Okay, next is 50-day moving average, and then the anchor VWAP and 100-day moving average with this 283 level. So that's what we're looking at on the Qs. Okay, and let's go back to the non VWAPs without. I just saw index without. Okay, so if we go, like I told you, that inverted hammer, boy, on that Qs, that's going to bring selling. Usually that big upper wick in a monthly, right? I talked about that. All right, we'll get into this volume profile and the market profile in the futures. So that's bearish right there. Let me tell you that. Okay, but we'll get into that. All right. So let's go over to the market profile. All right, let's talk about yesterday. Let's talk about yesterday. All right, so So let's look at what happened yesterday, right? Very important. The most traded price moved down 39.67. So that's here. Okay, you can see we built out some nice volume, which almost overtook and moved this down here. Okay, and how profile works, this is the profile for the week, right? This is what it looks like. And how to look at this now, Better bring this up now. We'll bring it up just to show everybody how it looks. Let's draw that again. So this is the profile, right? Now, if you anything know about volume profile, market profile, a regular distribution, a bell curve, always looks like this, right? You have excess at the top, you got a curve, and it goes down like this. 61.8 or 68% is the value area, right? 70%, you just round it. So this is telling us we're going to make a move lower again, right? The only reason I'm saying that is because once this most trader price of the week moves lower, see it's down in the lower portion of the profile. Well, what would the profile look if we made a move lower, right? It's going to build out to that bell curve. It's going to bring excess lower, right into this demand zone. Okay, so when you have a completed profile, it looks like this. So this is considered like a bearish imbalance. It's like we're building volume to the downside without much excess. Okay, so this usually means when you move this lower, we're going to make a move lower. Usually, okay? Usually. I always say that nothing's absolute. Nothing works 100% of the time. But this is usually what happens. Okay? And of course, if we can't go lower, right, you're going to go right back to here and either go higher or come back down and build it out, right? All right. So that's that. So what we did yesterday is, again, held the lows. It was, like I said, outside in, outside in. It made us feel like it was going to go lower, and it couldn't. Okay, but the overnight did that for us. Okay, so this is the 100-day moving average here. Okay, 200-day moving average in the futures here. Okay, so let's look at what's happening now. Okay, let's look at what's happening now. Okay, now look at the profile. Notice this is the 24 basically the hour profile, but look. See, the value is being built out here, right? And look what we have, excess. Almost down to this demand zone. You see what I'm saying? Now, before I showed you just real-time trading hours. This is 24 hours, but because this volume was built out here, it enabled it to go lower. So see, now you're running out of volume down here. It's creating excess. That's how it works, right? So now the next goal of the market is to see if it can build. This is how it works, right? See if it can build this volume down here to bring this lower. And then you might get a profile looking like this again to go lower. Okay, that's the beauty of just looking at something like this and just saying, oh, okay, we don't have a lot of volume here. Okay, so oh man, I just saw OBS connected and reconnected. I hope everybody is still with me. Everybody meaning if there's only two people or one person watching. Am I still live? I mean, I could just be nobody's watching, but because I just saw I disconnected for a second. Let's see. I'm gonna go real quickly. See if somebody's even here. Oh, it keeps cutting out. How about now? Is it still cutting out? I just saw OBS like kind of crashed and then it came back. Is it stable now, or should I just? It's good right now. Okay, then I'm gonna continue. Thanks, Colby. All right. So I don't know how this is gonna look later on, but hopefully it's all right. All right, let's get into this real quick. All right. Um, we got our overnight lows here, 39.24. All right, man. Thanks. Overnight highs, 39.65. Yesterday's highs, 39.75. Yesterday's lows, 39.43. So we got a gap down. We got a gap down. Okay. Price is here at 39.34. All right. So always in a gap down. You know my mantra is basically: do we gap fill? Do we fail the gap fill? Do we gap and go lower? Do we gap fill and go back into range? Right? That's all going to be MGI, market generated information for us to look at, right? However, if you noticed what happened in the overnight, we were up here and then we just sold, created single prints in thin volume, right? And now we went all the way down here. So this profile is about 85% net short. Okay. So people did take some profit, but still there's a lot of shorts here. Okay. Um, this is really gonna be something to look at, right? Oh, elephant on a string, huh? Yep. Well, toothpick. Um, good job. Um, now it's a little different, okay, because you don't have a toothpick holding up an elephant really, because there's not much volume here. However, something has to happen. Let's just get into the trade, okay? Now there's a beautiful trade setting up here. Beautiful, beautiful trade setting up. So we're down here, okay? We're down here. We have a supply zone right here. What's lining up with that supply zone, right? Most traded price of the overnight. Yesterday's low. Gap fill. So this is very important. If we stay down here, great. And if we come up to here, hit that gap fill, you're going to be in supply. This supply zone was tested already and it failed. It was resistant. So the gap fill could make this market roll over, and you target the overnight lows and then really be cautious about this demand zone here. Okay. Now, another thing to note is whenever you have an overnight low, that's like a new low in the market, right? Nothing's been here before. That's usually means it's we're gonna make it. Usually an overnight low that's like a brand new fresh low in the market. It usually means that it's not really just the low. Usually we make that low in the real time trading hours. It's not a secure low. It's not like a, okay, we're not going back down there. Usually an overnight low, that's a new low in the market, doesn't usually just, that's the low. Usually you break that in real-time trading hours. Okay. So now let's get into the 85% net short situation we have with the single prints up here. All right. Now, for us to order to see strength, what do we need? We need the gap fill first. So if you check that off the box, all right, we filled the gap. Now, you have a supply zone here. Okay. And you can see right here is like a resistance right here in the profile. You can see it. So what you would want to do is break this supply zone. Now, in the beginning of the market, it could be a little nuts because it's more volatile, but I would like to see it break and then maybe retest yesterday's low. And if you see not a lot of weakness, you're going to want to go long, and you're going to want to target the most traded price of yesterday. That should be your first target, okay? Because then you have supply zone, monthly VWAP, 100-day moving average up here. Okay, so take advantage. This would take advantage of the weak shorts from the overnight. This little toothpick here, this no volume here, you get a nice push, it's going to get cleaned up, should go right to here, and ultimately monthly VWAP in the supply zone. Hopefully that makes sense to everybody. So that's what I'm looking for right now. Okay. So let's look at the NASDAQ. NASDAQ yesterday made a weak low here. That's a weak low. Okay. Meaning that's weak hands. That's like traders, like retail traders like me and you, buying these lows, not institutions. So that's weak hands. So that means you could break those, right? But we broke them already because we know that we're gapping lower, right? So most trader price still up here, hadn't moved down yet, but you got volume here. I expect that to be moved down. Okay, let's look at what's going on now. All right, so same thing, right? Single prints. Look at that. There's the low yesterday. There's the low already overnight. Now look where we're bouncing right now. And the Nasdaq's weaker. Okay, it's a lot weaker than the ES. You got Tesla, Snow. Well, Tesla's the big one. Okay, Nvidia, Apple's down 1%. All right, that is pushing our market down, and this is the 50-day moving average in the futures. So I expect to get a little bounce up. Doesn't have to happen. Okay, so that's what we have going right now in the futures. That's a 50-day moving average on the daily chart. Okay, we don't have demand zone down to 11,766. Okay, we don't have the demand zone to all the way to down there. So this on a NASDAQ, okay, this you have a better chance for the fade off the open because we're at the lows now. We're gapping lower and we're at the lows. We're not like up here like we are in the ES, right? And you're at the 50-day moving average. So you might want to see a dip below the 50 moving average off the open, come across, go long. And now remember, you have to see some strength pumping in there. Now remember, this, everybody's short. Probably about 90% net short from here. Everybody's short. Now this is a little more tough sledding, I would say, because you don't have single prints here. You have kind of a lot of volume here. So that might not be the best trade just because there's thick volume here. Still could work because of the off the open. Still could work. So I'm not saying this is the best trade just because of that volume. Come down, come above, can't hold prices down there, and you want to look for the supply zone as your target. Okay, if you hold, look for the gap fill of 119.25. However, the other trade, just like on the ES, is there in the NASDAQ. If you don't want to look for this, right, I would say that the odds, I wouldn't call it the best trade here, even though, because I don't like the volume. There's thick volume here. So that's going to be not easy to push through as easily. Okay. However, you get into this supply and you start accepting, right? And you bust out of it. Well, like I said, you hold this right here, which is yesterday's lows. You fill the gap, you hold it, and we get some strength, momentary strength. You could go long, clean these single prints up because there's no volume here, right? And target up here. There's a lot of overhead supply here now. So as far as trading, if you want to trade with the most high probability, you're gonna want to wait until we probably, here's monthly VWAP. If you just wanted to wait and say, hey, you know what, I want to be short and short all the pops in the market, you can just wait for this supply zone, which is the overnight high, and then short. Okay, that's probably your best shot if you just want to wait for that. Those other things are a little more difficult. You have to really know your order flow and stuff like that to really see those trades. I'm not saying they're easy ones. Okay, so back to the ES. You can see in the ES now it's a little weaker. Before it was like up here, I believe. So same thing. You have supply right up at the top here. So same thing. I would say if you really wanted to just be very patient and go, hey, you got monthly VWAP here, you got 100-day moving average up here, overnight high, and above it is the most traded price of the week. You could literally just be like, I'm waiting to see what it does up here in the supply zone, and then you could look for the short. That's the other high probability. I would say that's higher probability play. Okay, because you always want to go what's going on in the market, the trend. So if you just want to follow the trend, wait for that to pop up here, look what the market does, and that's that. I didn't go over it, but the 10-year yield, my triple-headed monster, look at that. It's pushing higher. Next up, 4.2. This is not a good sign for equities. Okay, I've been talking about this for a while. Look at this uptrend. It's breaking out. Okay, VIX moving up now. Okay, all right, 21.17. You want to see it break this resistance right here, go up to 22. Dollar, that's making a comeback today. Now resistance at 105.32. You bump above that, bad for equities, bad for commodities. All right, so those all been your indications from here to here. Okay, but best definitely the bonds, 10-year yield. That is the story. That's why I show you guys this every day. That was the story. That was telling us, oh, the bond market. Look at that. This freaking OBS is killing me today. All right, so I'm gonna go. I don't know what OBS is doing. It keeps going in and out. Probably a horrible feed to watch, so I apologize for that. Wish everybody good luck today. Give me a comment, like, or subscribe, even if it was horrible today. I don't know what OBS is doing. So stay green, stay patient. Alrighty. and I'll see you guys tomorrow, if not an update.